Bitcoin's price has been on a wild ride. From its humble beginnings to its dizzying highs, this digital asset has never failed to surprise. Early adopters have witnessed incredible gains, yet Bitcoin's volatility is a stark reminder of its unpredictable nature. This inherent instability makes predicting its future a challenging endeavor. Understanding Bitcoin's past price movements is crucial. It helps us grasp the factors that could influence its future trajectory. Will 2026 mark another chapter in Bitcoin's volatile history? Only time will tell. But by examining the elements at play, we can gain a clearer perspective on what the future might hold. The Bitcoin halving is a core feature of its design. Every 4 years, the rate at which new Bitcoins are created is cut in half. This event has significant implications for the cryptocurrency's supply and demand dynamics. Historically, halvings have preceded periods of significant price appreciation. The reduced supply, coupled with steady or increasing demand, puts upward pressure on Bitcoin's price. However, past performance is not necessarily indicative of future results. The next halving, Ugzai Erling Ersinyan, is already generating considerable buzz. Will it trigger another bull run, or will the market react differently this time? This question is a subject of much debate among investors and analysts. Governments worldwide are grappling with how to regulate cryptocurrencies. This uncertainty creates volatility in the Bitcoin market. Clear and consistent regulations are needed for broader adoption and stability. Some countries embrace Bitcoin, fostering innovation. Others impose restrictions, fearing its potential impact on their financial systems. The lack of a unified global approach to regulation adds another layer of complexity to Bitcoin's future. Regulatory changes can significantly impact investor sentiment. Positive developments can boost confidence, while negative news can trigger sell-offs. As the regulatory landscape evolves, its impact on Bitcoin's price remains a significant unknown. The world of blockchain technology is constantly evolving. New cryptocurrencies emerge, each vying for a piece of the pie. This competition can impact Bitcoin's dominance. Innovation within the Bitcoin ecosystem is also crucial. Improvements in scalability, security, and user experience are essential for Bitcoin's long-term success. However, technological advancements are not without risks. The emergence of a superior cryptocurrency could challenge Bitcoin's position. Similarly, unforeseen technical challenges could undermine confidence in the technology. Navigating the ever-changing technological landscape is crucial for Bitcoin's survival. Bitcoin does not exist in a vacuum. Global economic trends such as inflation and recession influence its price. When traditional markets experience turmoil, investors often seek alternative assets like Bitcoin. The current macroeconomic environment is complex and uncertain. Inflationary pressures, geopolitical tensions, and supply chain disruptions create a volatile backdrop for all assets, including Bitcoin. Understanding these broader economic forces is critical for anticipating Bitcoin's future price movements. As the global economy navigates these challenges, Bitcoin's role as a hedge against traditional market volatility will be closely watched. Whether it can fulfill this role remains to be seen. Section 6. Expert Predictions: A Divided House. Predicting Bitcoin's price is a fool's errand, as the saying goes. The cryptocurrency market is notoriously volatile, with prices swinging wildly in short periods. This unpredictability makes it challenging for even seasoned analysts to make accurate forecasts. However, that doesn't stop analysts and experts from making their own forecasts. They pore over data, analyze trends, and use various models to predict where Bitcoin might be headed. Their opinions range from wildly optimistic to cautiously pessimistic. Some experts believe that Bitcoin's price could skyrocket, driven by factors such as increased institutional investment and broader acceptance in the mainstream financial world. Some believe Bitcoin is on a path to new all-time highs, driven by institutional adoption and growing mainstream acceptance. They argue that as more big players enter the market, the demand for Bitcoin will increase, pushing its price higher. Others predict a significant correction, citing factors like market cycles and regulatory headwinds. They warn that the market could face substantial downturns due to increased scrutiny from governments and potential regulatory crackdowns. The lack of consensus among experts highlights the inherent difficulty in forecasting Bitcoin's future. The market's complexity and the multitude of influencing factors make it nearly impossible to predict with certainty. It's important to remember that these are just predictions, not guarantees. No one can foresee the future with absolute certainty, and the cryptocurrency market is particularly unpredictable. Investors should conduct their own research and make decisions based on their risk tolerance and investment goals. It's crucial to stay informed and be prepared for both the potential gains and the risks involved in the volatile world of cryptocurrencies. Section 7. The risk of a 2026 crash, fact or fiction. In this section, we delve into the potential risks and uncertainties surrounding Bitcoin's future, particularly focusing on the year 2026. Is a significant market correction on the horizon, or are these fears unfounded? While past performance is not a guarantee of future results, historical price patterns can offer insights. By examining Bitcoin's price movements over the years, we can identify trends and potential warning signs that might indicate future volatility. Bitcoin has experienced significant corrections following previous halving events. These halvings, which reduce the reward for mining new blocks, have historically led to increased scarcity and subsequent price adjustments. Could a similar scenario unfold in 2026? The upcoming halving event, coupled with other market dynamics, raises questions about whether Bitcoin will face another major correction. Several factors suggest a 2026 crash is possible. Market cycles, regulatory uncertainty, and the emergence of competing cryptocurrencies could all contribute to a price decline. The regulatory landscape is particularly crucial, as new laws and regulations could impact Bitcoin's adoption and market behavior. The rise of alternative cryptocurrencies also poses a threat. As new digital assets gain traction, they could divert investment away from Bitcoin, leading to a potential decrease in its market dominance and value. However, it's equally plausible that Bitcoin could defy expectations and continue its upward trajectory. The resilience of Bitcoin and its ability to recover from past downturns suggest that it could still achieve new highs. Instead of fixating on a specific year, investors should focus on the long-term potential of Bitcoin and blockchain technology. The underlying technology continues to evolve, offering new opportunities and applications that could drive future growth. Short-term price fluctuations are inevitable, and investors must be prepared for periods of volatility. Understanding the factors that drive these changes can help in making informed decisions, but the true value of this innovation will likely play out over decades, not years. The transformative potential of Bitcoin and blockchain technology is vast, and those who stay the course may reap significant rewards in the long run. Section 8. Navigating the Bitcoin Maze, a call for prudence. The world of Bitcoin can be daunting for newcomers and seasoned investors alike. The volatility, complexity, and constant change require a cautious approach. Diversification, risk management, and thorough research are essential. It's crucial to avoid making emotional decisions based on hype or fear. The cryptocurrency market is rife with scams and misinformation. Investors should rely on credible sources and seek professional advice when needed. Remember, investing in Bitcoin is not a get-rich-quick scheme. It's a high-risk, high-reward asset that requires patience, discipline, and a long-term perspective. Section 9. Bitcoin's future, your crystal ball. No one can predict the future, least of all in the fast-paced world of cryptocurrencies. The market is volatile, and prices can change in the blink of an eye. One moment Bitcoin might be soaring to new heights, and the next it could be plummeting. This unpredictability is what makes the world of Bitcoin both thrilling and daunting. Bitcoin's journey has been full of surprises, and the next chapter promises to be just as unpredictable. From its humble beginnings to its meteoric rise, Bitcoin has defied expectations time and again. The historical price charts tell a story of resilience and volatility, with sudden spikes and dramatic drops that have kept investors on their toes. Whether it's a meteoric rise, a dramatic crash, or something in between, one thing is certain: Bitcoin will continue to fascinate and challenge us. The roller coaster of Bitcoin's price movements is a testament to its unpredictable nature. Investors must be prepared for anything, as the market can shift rapidly and without warning. Rather than seeking definitive answers, perhaps it's more valuable to ask ourselves, what role do we believe Bitcoin will play in the future of finance and technology? Will it become a mainstream currency, or will it remain a speculative asset? These are the questions that investors and enthusiasts alike must grapple with as they navigate the ever-changing landscape of cryptocurrency. Our answers to this question will ultimately shape our own investment decisions and determine whether we choose to ride the Bitcoin roller coaster. The future of Bitcoin is uncertain, but one thing is clear: it will continue to be a topic of intense interest and debate. As we look into our crystal ball, we must be prepared for the unexpected and ready to adapt to whatever the future holds.